I think we're live. Hi, Jesse. Welcome to Winter with Grace.
Hi, Grace. Good to see you. Thanks for having me.
To start the show, I want to give a quick shout out to our amazing sponsor. This episode is brought to you by Vervin. If you're a GP or LP looking to simplify the capital raising and deployment process, Vervin is here to help. Trusted by over 800 funds and managing more than $2 billion in transactions, Vervin offers a secure, streamlined payment platform designed specifically for private capital markets. Say goodbye to manual reconciliation and repeated follow-ups. Raise and deploy capital faster and with greater transparency. Ready to make your fund operation smoother? Visit vervin.com or slash, actually use my bit.ly, please, and see how easy it can be. Okay, so to start with the show, I would love for the audience to kind of know you a little bit more. So you have been an advertising executive where you have started your own, I would say like a digital marketing agency before you started your own venture fund, with the backing of one of my favorite like outdoor company, which owns like
Yeah.
Vans, North Face, Timberland, and all the good stuff. So like, why don't we start with like, what were some core career lessons that you learned early on in your career that kind of shape you into who you are today?
Yeah, thanks. Yeah, so I ran a marketing agency called Magneti. I did that for 12 years. And before that, I worked for a couple venture-backed SaaS businesses. I live in Colorado, a couple based here in Colorado. And one of the things that I learned early on was certainly tied to kind of the logistics of marketing itself, which, I mean, so many lessons about what it means to tell stories, what it means to understand your audience. But the the core idea around what I think our job is at marketing is not to talk to everybody, but to talk to our audience, which is like, it sounds duh, right? But I remember one of my first jobs, my boss drew this little thing on the whiteboard, and it was like all these little dots everywhere. And he was like, imagine this is our customers, and this is media, and this is, social media and all that stuff. This is like the whole landscape. And he kind of filled in one of the little dots, and he said, everybody thinks that marketing is about being everywhere and fill in all those dots. But our job is to find our audience and then just be right around them. And he kind of drew the little, kind of filled in the dots right around that center dot. And that simple little visual just always helped me to say, like, our job is to not, like, we're not competing in marketing against the Apples and the big brands, the Pepsis, these like massive billion-dollar ad budgets. Our job is to just be where our audience is, and that's a lot easier to do. You can find that. So one of the things I also have always thought about marketing is I think the best marketers are almost like anthropologists in a way, like this curious seeking of understanding like who this is. And it's not me, the audience is not me. And even if I do buy the product, I am not the audience. And so there's something we used to call the marketer's dilemma, which is that gap between who you are and the audience you're speaking to, and that you have to find ways to overcome that gap. So lots of stuff that I learned in the marketing world early on in my career. But I think the best marketers are part anthropologist, part sort of data scientist, part creative, all in one wrapper.
Totally. I just thought it was like so cool that like when I met you at Coolwater, first of all, quick shout out. I was so like happy that like you actually read my book. So like,
There it is on your shelf too.
yeah, exactly. So like I like almost never, well, like I always like meet people like whenever people talk about like my podcast or bug, I was like always like in shock, though like I know that like
Yeah.
based on the data, a lot of people are listening, but or like actually bought the book, but like I'm just like so happy that I meet you in the wild. So why don't we start with like how do you transition yourself using the advertising knowledge into your day-to-day job for your own venture firm? And I know that you guys are venture studios, so one of the most interesting thing about like what you guys are doing is you are kind of like investing in the complementary B2B or B2C company instead of just like the brands themselves.
Right.
And obviously I also met like one of your founders, Sarah. I love her. She's awesome.
Yes. Shout out Sarah Klingman from Mostas, New York City. That's right.
Exactly. So we collab on our New York event together, and now we're also gonna have a call soon about like the next collaboration. But I wonder, when it comes to building your own venture firm slash venture studio, why don't we start with like what is Wildwood Ventures, and then we could talk about your transition from
Yeah.
leveraging industry knowledge to like building the firm.
Yeah, great. Yeah, so Wildwood is actually a spin out of the corporate venture team that was inside of a Fortune 500 based here in Colorado called VF Corporation. A lot of people have not heard of the VF brand, but they have heard of the brands that they own. So they are a corporate brand owner, and they own 11 world-class consumer brands. The big ones being the North Face,
Mhm.
largest outdoor brand in the world, Vans shoes,
I
an
love
absolute American icon, and Timberland boots is one of their other big ones. So they have 11 brands, and they are based here in Colorado, moved their headquarters here a few years ago from North Carolina. So I shared a little bit about my background. I'm an operator, startup guy, sold my business, a company called Magneti. I sold that in the fall of 22. My fellow co-founder and fellow general partner at Wildwood is a guy named David Wagner. David's fantastic, super brilliant man. And he was on the executive team of VF Corporation, global head of strategy. He had been there 17 years. And part of his journey, kind of in his remit within VF, was he was running their corporate venture strategy.
Mhm.
So long story short, after I sold my company, David and I had known him through the Denver area kind of network here. Long story short, there was an opportunity with VF Corporation to spin out the corporate venture group. And there's actually a lot of corporate venture groups that have spun out in the last several years. And essentially, you go from being like a wholly owned business unit with W-2 employees to a limited partner. So VF is a limited partner in our first fund. And so we are not employees of VF Corporation. We are employees of Wildwood, but VF is an amazing partner to us and an investor in our first fund. So we're a spin out. Part of, you kind of alluded to this, our job, whether it was David and team inside of VF or now outside as Wildwood, it was never to invest in the next North Face, Vans. It was not an emerging brand acquisition strategy. It was intentionally early stage venture focused on the market for healthy and active lifestyles. So you mentioned this kind of complementary nature to what we invest in. So this is tech startups that promote healthy and active lifestyles, life to the full, as we like to say. So our startups that we invest in at Wildwood, maybe someday VF would be an acquirer for those, but they tend to acquire consumer brands that sell product, whereas most of these business models are software and technology. So that's the genesis, the kind of origin story of Wildwood. So we are early stage tech investors, pre-seed and seed, but with this same focus, healthy and active lifestyles. We like to say there is more technology in our pocket than sent Americans to the moon the first time, literally. Our iPhone 15, I did the math, is 200 million times more powerful than the computers on Apollo 11. We have more content, more gadgets, more supposed connection, right? I mean, like you experience this all the time. We have likes all this content and entertainment. But there's just ways we don't think that we're flourishing as humans. And that's really our thesis, is this kind of broad view of human flourishing across physical health, mental health, social and spiritual health, and outdoorsy, which is what most people kind of think of when they hear the VF connection, is certainly part of that. But that's not only it. We've got investments kind of across all of those different areas. So that's a little bit about kind of the genesis, what we invest in now. And the other thing you mentioned, and I can give more details on this, we do what we call kind of a growth studio, which essentially means, yes, we write checks, but we also roll up our sleeves. Our team, we've got an awesome team at Wildwood, and work with these companies really hands-on. So it's kind of like an accelerator, but much more hands-on, non-cohort based. it's not like a true venture studio that starts and incubates its own companies. We don't start the companies. We find founders already working, but just work real hands-on once we write the check. So we use the term growth studio.
Mm-hmm. I have a question on that. So like, for example, so I know that you guys also invested in some sort of like brands. I wouldn't say call it brands, but like, okay, so I'm gonna just like, I'm currently on the portfolio side. Obviously, I like Mostis. That's like very different. So for example, Mostis is an event planning company slash like event planning technology company. And there is other companies that you guys invested are like plus size clothing, or there's like mental health care support for athletes. Why don't we talk about like how do you define these like companies that are focusing on your health and wellness, but also like, or like focusing on outdoor, but also like not exactly, you know, like an emerging brand? Like how do you guys define like what is something that's belong to whatever in your realm?
Yeah, great question. Yeah, because even within, like when you say health and wellness, there's a bunch of stuff that we don't invest in. For example, there's awesome investors, awesome entrepreneurs building in like food and nutrition.
Right.
We don't invest in food and nutrition out of our current fund. We don't invest in apparel startups. We don't invest in, like I got pitched recently, this really cool, super innovative material sciences business that literally takes old trash and food waste. And I mean, this was incredible stuff. That's not in thesis for us in fund one, is physical product. So we do have a couple companies in the portfolio. You mentioned Kinsa, which is gear for plus sized. And then a company called Out&Back, which is a used gear re-commerce, as in like kind of used gear marketplace. Those both have physical product, physical apparel. Those were ones we brought with us on day one when we spun out of VF Corporation. But moving forward, our startups will primarily be technology-based, software-based businesses, and not physical product. Maybe someday at Wildwood, we will expand strategies and include things like food nutrition. Again, we know we're based here in Colorado. There's a bunch of great investors and entrepreneurs that do that. Like in the Boulder area, it's kind of a hotbed for food and nutrition innovation. But for us, it's technology-based businesses, and we have 5 thesis areas. So number one is what we call improve my health. That's all sort of digital health. It's not medical, clinical, biopharma, med devices. Our second area is what we call explore and move. That's outdoorsy stuff. The third category is what we call train and play. That's all sports, fitness, and exercise. A bunch of great investors that invest in that space too, that we see deals with. Our fourth area is what we call connect with my people. There is you've heard the stats, probably lots of people have heard the stats about social isolation, some of which could be caused by technology and social media. But the stat a couple years ago was that social isolation is worse for health outcomes than smoking 2 packs of cigarettes a day. So, have friends and smoke. No, I'm just kidding. And then the fifth area is what we call focus, my mind, and spirit. And so that is all sorts of mental health stuff, as well as kind of spiritual connection and belonging, faith tech, which is a whole category as well. So technology businesses, but we have these 5 thesis areas. And again, awesome startups with physical product, the stuff you're going to find in retailers like Dixon, REI, but that's not our focus for this fund.
I wonder, when you're thinking about, I feel like those are some really interesting categories, and I wonder how do you guys like kind of came up with it? And obviously you guys have a lot of advisors that are in the outdoor space, or like executives from the VF corporations, and I guess like how do you utilize the advisors to advise these kind of companies? And obviously I think one of the most valuable things would be the connection to these corporation. Like maybe they could implement certain type of technology or like things that you guys invested in into their day-to-day operation or like their associated businesses. But I wonder like if you have any specific example on how you leverage these like great brands and leader from these great brands to like help the portfolio company to grow. By the way, hi Jeff. Wanted to shout out to the audience who comments. So
Shout out to anybody who says something. Hi, Jeff Haynen. Jeff's a friend of mine. I love it.
awesome.
Yeah, so our connection to VF, this is a great topic, a great question. We are so grateful and so blessed for our relationship with VF as the anchor LP in our fund, as well as these partnerships, advisory relationships that we have with so many of the awesome folks there. So what you're referring to, we have an advisory board, a public advisory board. We have it listed on our website. And these are folks that are, like, for example, shout out to Jan van Maasveld. He is the president of Smart Wool and Icebreaker, 2 of the 11 VF brands. Jan is fantastic. He's a great sounding board. So grateful for his belief in what we're doing and his time and energy. So, but what you're keying in on is like, this is our sweet spot. This is our competitive advantage, is our relationship with VF. Our startups have an opportunity, if it makes sense, to partner with different brands in different ways, whether that's working with some of their talent, whether that is partnering with them as an early customer. So we have a portfolio company right now, just seemed like a great fit to partner with one of the brands. We approached the brand, we said, hey, we've got an idea for you, and we can get early meetings that most startups can't. Now, to be clear, VF still needs to make, those brands need to make their own decisions. They have no, we're not pressuring them. There's no expectation that they have to hire or work with or partner with all of our startups. But they are there and available and say, we want to listen to creative ideas. So love the relationship with VF, so grateful. And our startups, to be clear, have a whole range of how they've worked with VF. Some have had a lot of relationships and kind of value from VF, and others maybe depending on their product. Like, for example, Mostus is this event business that it's AI, harnessing AI for event management and event creatives. So proud of Mostus. They're doing great work. They could be a great vendor to VF and VF's brands at some point. They haven't yet, but there will be a time when that makes a ton of sense. So we are so, again, I know I've said it multiple times, but so grateful for VF, the people inside the brands, like Jan, like I mentioned, who's a part of our advisory board, who just say, how can we help? Where is their opportunity? And how can we create win-win situations? VF is based right here in Denver. I live in the suburbs on the south end of town, but we have an office up near there, and we are at VF with regularity to partner with them and brainstorm, bring data and insights. One of the things that we've found is being able to just kind of say, hey, here's what we're seeing in the market. These are the kinds of pitches we're getting. This is the kind of, I believe that entrepreneurs are a fascinating sort of thermometer on the world. Because it's entrepreneurs that see an opportunity and need, and are willing to do something about it. And so when we can say, hey, these are the things that are bubbling up from our nation's entrepreneurs, there's always just a fascinating layer of insights that come from, oh, this is what the world is feeling, and entrepreneurs are trying to solve for that. There's just this like bubbling in the zeitgeist that happens, that entrepreneurs, so many times you have like artists and entrepreneurs are responding to in very unique ways. So that's something that we can provide to VF, for example, is just, here's what we're seeing out in the market.
I wonder, so like when it comes to, so for example, I'm just using the Improve My Health thesis as an example, right? So like, for example, yesterday I met founders that are building, let's say like SaaS for like diagnose cancer, or, these kind of very deep technical domain knowledge kind of companies. Like, do you think that's a fit for Wildwood, or like, do you feel like it's more towards like yoga training studio, or like, the future of like, I don't know, Peloton equivalent, or like what would you say is something that's like where you draw the line of like this is belong to our thesis versus like something that's like require a lot of, um a lot of like investment into the particular subsector, and there is a lot of legal um like regulation involved in the development of a product.
Yeah, it's a great point. So, and improve my health is a great category to talk about that dynamic, because you have, like, on a spectrum, you have like true deep tech, right? You
Mhm,
have like university spin out tech transfer kinds of research and products. You have FDA and other regulatory and compliance style startups that um, you have like within the pharma industry. I mean, they're investing in so many products, but only a tiny percentage will actually come to market. So the way that we think about that category, for example, is we are not a team of scientists. We are
mhm,
not a team of regulatory experts. We are a team of consumer and industry. That's our set of experience.
mhm,
And so within Improve My Health, for example, as soon as it requires a bunch of in-depth, very particular diligence around compliance and what I'd call almost like the deep tech side of that industry,
mhm,
there are much better investors that know how to look at and vet those startups. So ours are much more focused on digital health and kind of mass market products.
mhm,
We don't only invest in B2C. It's about half our startups are B2C and B2B, but it tends to be stuff that is not what I'd call deep tech.
mhm,
Um, and we've got some great investors we can send those deals to instead. But our team is not structured, nor our set of experience lends itself well to that kind of particularities.
mhm. I wonder when, like, since like we met at the Emerging Manager Summit, basically. So I wonder how does your portfolio construction kind of look like, since you guys are very hands-on with the portfolio companies. You don't really help them fund the company, aka like you don't help them like I guess like put together like their co-founder or like help. I'm sure you help like raise funding, but like I'm sure like it's not like from the it doesn't have to be from like the very beginning. So I wonder, what is the ownership target that you're kind of targeting, and how is it kind of like, how do you think about portfolio construction or like check size
Yes.
when the companies are so diverse and you could be getting various different type of involvement with these companies?
Yeah. Yeah. Great question. So there's kind of like, what does the growth studio mean?
Mhm,
And how is that downstream from a portfolio
mhm,
strategy? Um, we invest at the very earliest stages, pre-seed and seed. Now, like I mentioned, though, we're not founding these businesses. So usually that means there's a founder with an idea, and sometimes we help them pivot. We've done that with some of our startups. Um, More or less, we write checks for preferred shares, like a traditional venture investor does, and depending on valuations and check size, we might end up with 1 to 4% of the business via the preferred shares.
mhm,
And then with this growth studio, it's similar to an accelerator, and it's going to kind of be custom based on different what a startup needs and how long they need our help. But the best way to think about it would be the kinds of common share grants that an accelerator would, but a little bit more because we're more hands-on, we're more in depth, we're kind of a fractional embedded executive team.
mhm,
We don't call ourselves co-founders, only because I've been the founder of companies before, and that is a special title
mhm,
that we reserve for the founders. We don't call ourselves that, but we are very, very hands-on and in-depth. So
mhm,
our model is definitely oriented around higher ownership targets because of our growth studio. That's not for everybody. There are some founders, that just say,
like
hey.
double digits, or is this more
Yes.
towards like
Yes. Well, yeah.
like
Once you come,
double digits, or like something like it's like if there's like a ballpark that you guys are shooting
yeah,
for?
it's all over the place. Now, what I'll say is both common and preferred. So this would be with both class of shares. It's anywhere from low single digits to, upper teens and even into the 20s for some of the startups, depending on the valuations. So our model is definitely kind of like an accelerator plus. But if you look at a traditional venture studio that starts their own companies, sometimes they will own more than half of the cap table through seed towards Series A, and we're kind of further down the spectrum from that. But again, it's all custom. That's why we're different than an accelerator. There's some wonderful accelerators out there. Techstars, YC, they have these standard terms. Here you go. Here's the deal. You get this much cash. This is how much equity you give up. We do deals at a kind of a custom style.
I wonder when it comes to like, I guess like fundraising, obviously you guys have one of the anchor LP that's like this like major corporation, but what else like made up on your cap table as a fund? And then I guess like how has the fundraising journey been like for you? I feel like getting the anchor is always the hardest part, but since you already have that, how do you think about fundraising moving forward?
Yeah, because of SEC regulations, I won't talk too much about our own fundraising, but let me tell you about fundraising for our startups, because there's a similar environment at play. We help our founders, our startups, raise money. We've got a whole awesome set of investors, co-investors that want to look at the deals that Wildwood has. And they're all over the country, and it's been awesome as we've built our brand over the last couple of years for that list to grow. And I've met so many awesome people. Right now, as everybody knows, I'm not going to say anything so genius here, but the fundraising environment is hard. You have a real story of haves and have-nots. You heard the official announcement that the former CTO of OpenAI, Mira Murati, just raised a $2 billion round at a $12 billion valuation with no team, no product, no revenue. Those stories don't help most startups. It doesn't matter. That is it's kind of like Shohei Ohtani signing a $700 million baseball contract. A generational player. Most baseball players, it's the same thing. There is a power law to fundraising itself. So one of the things that we talk a lot about for startups is this idea of just don't die mode. And if you had runway for 12 months, you raised for 12 months, assume that you actually need to find a way to stretch it to 18 or 24. And that is just a function of the environment, is that there is so much capital going into all these mega deals that it just kind of warps the landscape. You also have a dynamic where the LP environment, the funds going into venture funds, is at a low point from the last, call it 7 to 10 years. There's a few dynamics around that. IPOs, actual liquidity besides the IPOs, there's obviously lots of ways to drive liquidity, and also interest rates. Last I had heard, there's something like $8 trillion sitting in money market accounts. It's an all-time high. And when the rate on cash, when the Fed has interest rates so high, people are keeping money in money market accounts. For every quarter point that the Fed drops, I don't know the exact number. I've heard slight variations on this, so don't quote me on it. But for every quarter point that the Fed drops the Fed funds rate, there's something like $200 to $400 billion that leaves money market accounts and goes back into either public and private markets. So point being, there's so much money that's sitting in these money market accounts because interest rates have stayed relatively high. And so fundraising into venture funds has been harder. The data shows that. And so what that means then is the VCs, the general partners of these funds, are not writing checks as fast. And so you've heard all of the stories, and this is all over LinkedIn, about the ideas, like, for example, of seed strapping. the idea of like raise one round and then see if you never need to raise again. Kind of bootstrap after your seed round, if as it were. So part of the fundraising journey is not just, can you be good at raising money, but do you have the sort of FP&A chops to understand burn, runway, and do I have enough of that to hit enough milestones to raise my next round? And that's just a common dynamic right now.
I have a question about the companies that comes to you guys. Like, so do you feel like because of you live in where you live that like a lot of outdoor companies are just physically being located around you, or how do you think about like from the sourcing perspective? um since I feel like I live in Silicon Valley, so everyone I know and their mom is starting a SaaS in the AI space right now.
Yeah.
But I wonder, so like for a company in the outdoor space or in the health and wellness space, especially I feel like the companies that are just like in your investment thesis about like train, play, explore, um, like is there like a specific place that you would source, or like what are some ways that you feel like your most interesting portfolio companies are coming from? I don't know if there's like any kind of like um, patterns or like places that you guys typically find them.
Yeah, great question. So I'll answer that at a few different levels.
Mhm,
At the highest level, Wildwood is not focused like just on Colorado.
mhm,
We have a few portfolio companies here,
mhm,
but we've got a couple in New York, a couple in Atlanta, Bay Area, um, Tennessee. So we have a national kind of footprint.
mhm,
Um, Within the different thesis areas, I mentioned the 5 different, sub-thesis areas. Improve my health, for example, is a lot more the coasts. We have one in Boston in that area. We have, you see some of that out of Texas as well. Um, Sports, fitness, and exercise, area number 3, which is the, what we call train and play. That's national. So there are a lot of startups in Colorado. So if you look at just the size of venture markets, for example. Now, again, one of the things I want to be clear is I don't think that venture capital is everything. There are lots of amazing businesses that don't need venture capital, shouldn't take venture capital, and could go on to be wonderful businesses that make the owners good money, great healthy cultures, bless their employees. And I really believe that. So
mhm,
I'm just quoting some of the venture stats. Colorado as a market is anywhere between like the 7th and 12th biggest market, depending on vertical. So, like, even within medical, for example, you have SF, New York, Boston is huge, Chicago is really big. So Denver as a pure TAM
mhm,
is not a top 5 venture market,
mhm,
but there's plenty of capital here. There's lots of startups here. And because living in Colorado is so awesome,
mhm,
you draw a lot of different people, including very talented founders. So the Denver Boulder area, it tends to be lumped together as a venture scene. And there's a lot of great stuff happening here. But yeah, we're not SF, but Wildwood sources deals across the country.
mm. So, what are some metrics that you would use to evaluate some of these companies? Obviously, I feel like you guys invest in a lot in like the marketplace or event platform. I thought that was like really interesting because I think it would be very overlooked if they're like fundraising in the valley. But obviously, those are like very useful companies for people that are like in the like I think in the like in the world in general. So like I wonder if there's any like metrics that you guys are like leaning towards too, and what does like the unit economic look like for some of these companies when you're working with them? Maybe we could use like one or two as an example. Let's say maybe Sarah's company or like this Spark sponsor company. Like how do you guys hands-on like help them to grow? Like, do you maybe help them with like paid marketing, or like how do you, I guess, like um from a day to day, like what's a kind of like agenda kind of look like for you to work with like aid companies?
Yeah. Yeah. So like I mentioned before, I think we call ourselves like an embedded fractional exec team. That tends to be the best way to do it. So for example, what that means is like we are not tweeting for these companies. We are not necessarily the back office for these companies, but we kind of have everything from like what we call a daily co-pilot. We have like a deal lead who is with that founder, talking to that founder every day, working on all kinds of projects at a really large capacity from our team. And then we have more like board level style things. So for example, David Wagner, who's my fellow GP at Wildwood, and we have bi-weekly partner syncs with the companies that are in the growth studio. So that means every other week, for example, I'm meeting with Sarah from Mostest. Now she's also working with Amy Mayer on our team, who's our head of product and one of our principals. Amy is fantastic. She's amazing at what she does. She's working with Sarah all the time on all kinds of stuff. We have what we call our 5 stars, which are like just these 5 common work streams. The 5 things that at Pre-Seed we think are really important that we can add the most value on. This doesn't mean there's not other things happening in the business, but these are the things we think are most important. So it's around product, unit economics, it's around growth, scale, kind of the vision of the business, and can you be a big generational business? Fundraising and FP&A, I talked about that earlier. Like, what are you spending, and how long do you have before you need to raise more money? And then team. We have a very kind of culture heavy view of the world. What I mean by that is in a world where people are going to make $100 million at Meta, and there's just such a hot market for some of the top talent. Research shows, my experience at Magneti told me, and I deeply believe that people want to be a part of a place where they feel listened to and respected, and yes, well compensated, but people just want to belong. Yes, people want to build big stuff, all that, but culture matters when you're building businesses. And that culture is something that creates a real stickiness around, we spend so much time with our teammates, with our coworkers, that culture is the thing that tells people this is a place I belong. So that's the kind of stuff on team. So we call it our 5 stars, and those are just the work streams. So if you think about like Sarah, for example, at Mostest, she's got Amy working with her across those things. And then those are the things that David and I would also be talking about. And then we have other resources, surgical support. But we're not saying you should use Wildwood, for example, instead of hiring a marketing director. You're still going to need somebody who's working however many hours a week on that. But we think we can be really high value add in the kind of pre-seed stage during our growth studio term together.
Since you mentioned like you guys don't do the back office, or like you don't like do a lot of like hands-on works, but I guess like how do you like I guess like is there like any example of like how do you guys like help the team? Since also on your team I saw that there's like a person that's head of sourcing, heads of build, and like CTO. Like how do you, I guess like use like maybe your principal Amy as example. Every day, let's say if she meets with Sarah, like what do they talk about? Like is that just more of like, oh, we brainstorm on some strategy level things, and then Sarah have to do whatever that is? Or like, I guess like how hands-on do you guys kind of like get with the companies? It doesn't have to be this example. I'm just saying.
Yeah, we still get hands-on. Like I'll give you an example. We have a company that we just invested in, and Kristen Gendron, one of our teammates, she is our COO and principal. She has spent dozens of hours rebuilding their financial model, and then using that to teach the team how to look at, build, and manage a financial model and to manage against it. That was a skill set that they didn't have on the team internally. And so Kristen just jumped in and said, this is missing. You need this. You need to have a data view of your business. There's art and science, and I'm much more of like an art type of guy when it comes to business. But you have to, if you don't know your numbers, you don't know your business. And so that's an example where Kristen just rolled up her sleeves and just said, nobody else is doing this. Let me make this right. But then she needed to hand it over and say, you guys need to be able to build something like this, manage something like this. So even Amy, she's amazing at product. She's amazing at like scrappy. Hey, let's use Zapier and AI agents to pull together, a tool, a scrappy tool early on at pre-seed. She's jumping in and building that stuff, but then wants to hand it over to the portfolio company and say, it's your job now to take it to the next level. So we're hands-on in many ways, more board members in other ways, depending on the startup, what they need. But what we do consistently is just, what does the company need and how can we help and resource around that? And that's much more than an accelerator. That's much more than a quote unquote traditional VC. It's just a lot more hands-on and value add is what we have continued to believe we're gonna build at Wildwood.
Totally. What are something that you feel like what are some trends that you're seeing in the outdoor slash like wellness slash health slash like basically like the space that you're looking at? Like, I guess, like, is there anything that's you find very different since we're living in the AI world? Like, I feel like every day I'm seeing like there's new tools that are coming in to like automate a lot of the stuff that you're doing at work. But what about the outdoor space? Like, is there something significant that's like having like a generational shift?
Mm-hmm.
Or like you feel like people are still building, but just like leveraging the newest technology like to make it faster?
Yeah, it's an awesome question. And if it's kind of the $1 trillion question right now is, what does AI mean? What will it mean for our lives? What will it mean for what it means to be humans? So let me give you an example of that. There's an article that we shared around our team from the Free Press, and it was talking about how AI could literally change the basics of the human experience. So the example that it used was around being smart. There are a lot of people who build their whole identity and career on being the smartest person in the room. And you probably know lots of these people, Grace. I know lots of these people. They're so smart. It's a total gift. It's a God-given gift, how amazing their brain is. What will happen, this is already happening, when we have an entity sitting in the room, ChatGPT, that is smarter than that person. And not only can that person, that super smart person, access ChatGPT, but everyone in the room can essentially have access to the same level of smarts. There's something in the identity of those people who call themselves smart, who pride themselves on being the smartest person in the room, where what will it mean for our kids and grandkids when they are no longer the smartest entity in the room? I have no idea what that means for the human condition.
I feel like I'm currently already not the smartest people in the room since there is ChatGPTs, but
So intelligence, think just raw intelligence. Like, we will no longer be the smartest beings on the planet. Okay, here's another category, is the idea of kindness and empathy. So there is a boom in people having AI companions. And that might be friends, or that might be even like romantic relationships. There's a company called Replica that is famous for its AI boyfriends, girlfriends, right?
yeah, we have a lot of people on our show like invest in like a lot of these like AI companionship and like this category. I wonder, let's say like if we already have ChatGPT or like these kind of like bots that's kind of like associated in our life, will that change how we interact with? I'm sure it will change like how we interact with the nature and everything else. Like, do you feel like people would be there's like a major trend shift that people will be spending more money and time into like play or train or like explore, or I guess like is there any new technology or like maybe not technology but like new innovation that you feel like there's like a trend of people building in the space that you kind of paying attention to?
Yeah, I mean, what's interesting will be we are still running headlong into more screen time, more digital relationships. The numbers are still growing.
Mhm.
You think back to what happened, like for example, with cigarettes, like in the 80s and 90s, where like everybody's smoking. It's just sort of like this can't be good for us, right? Like we know that. Um, what's happening is there is this pushback on that. There is these, you hear about digital detox as like a whole huge industry of
Mhm.
people saying, how can I live
Mhm.
outside the matrix or something like that? How can I unplug and live life that's not, the stats about, for example, American teen mental health, 60% of American teens have been diagnosed with either anxiety or depression. 60.
Mhm.
That is orders of magnitude more than what's considered an epidemic.
Mhm.
And so there's going to be this growing movement. We have a portfolio company in this space called Roots. It helps you have a healthier relationship with your phone. And there's going to be a growing pushback to say, I don't want my life to be predicated by the presence of my phone. So here's an interesting thought experiment. Johnny Ive just sold his startup to Sam Altman for $6 billion. The theory is that they're going to come with some kind of new device, the
Mhm.
new device, and that it will largely be kind of always on, listening to you all the time. Some kind of recorder, maybe you pin it to your shirt, or who knows, maybe it's a necklace kind of thing, whatever. But that it's an always on companion that you can talk to.
Mhm.
Here's what's going to happen, though. Here's one of my theories: is that what will happen was there will be new AI free spaces.
Mhm.
You're not allowed to record everything in
Mhm.
my home, for example. There'll be speakeasies
Mhm.
where you have to turn in your AI recorder, your Johnny Ive device, and that this is like a human only environment. And so, what will happen will be this, like, I think, a growth in understanding what it means to be human, uh, defining what that is in very like tangible ways, and then creating human focused spaces, places, products, and tools. Like, here's an example. I believe there will be already movies that will be largely AI generated, that will be really good in the next few years.
Mhm.
What if there was a new category, for example, in the Oscars that's human only? No AI touched this product.
Mhm.
There's going to be these spaces, these categories, whether it's like the Oscars or speakeasies, where as humans we say, technology is great. I want to use it to its benefit, but I also want to remove myself from it. And whether that's physical spaces,
Mhm.
or I want to watch entertainment that is, I know, is only written by humans. Um, that's fascinating, Grace, and I don't know what's going to happen there, but it's almost like um, what it means to be a human. We're going to keep defining that more and more because we're not going to be the smartest person in the room, and some of these AI companions are so kind and patient. We might not be the nicest thing in the room either anymore.
I wonder, since like you have the advertising agency background, can you share a little bit more about like, when you were like creating the agency, what goes into it and how is like that business model kind of like, how do you kind of like start it, initiate it with like your like basically build up your own like client base, and since you let like the client services back then, like how do you maybe if you could like share a little bit more about like how do you started the agency, and
Yeah.
to when you guys were selling it, like what was that kind of experience look like? Were you focusing on like, let's say, having like 100 clients first, or were you focusing on like, helping the client grow and then your business grow with like, 5 clients, or like how do you think about from the agency perspective, like how do you think about like the bootstrapping um perspective of
Yeah.
things.
Yeah. Great question. Yeah. So Magneti was the company that we built and sold, and we definitely viewed it. I mean, it's a pure bootstrap business, not a venture style business. I did not quit my other day job
Mhm.
until we had enough to pay me a very, very meager salary, but it was enough to like pay the mortgage. My wife also works, and so we were able to kind of, have two incomes to make that work. But we didn't just quit my job and hope to find clients. We grew it over 2 years. I didn't quit my day job until 2 years about after the founding of Magneti.
Mhm.
And so we de-risked it that way. And I think that's a great way to start lots of companies. It was very boots on the ground, the sales efforts, Grace. So like we started, our very first client was a book author, friend of ours. And she said, "Hey, will you manage our Facebook account? Will you post for me on Facebook? Here's my book. Go post on Facebook." This was early days. I mean, I'm like in my late 20s. Had never run a business before, all this stuff. This customer was paying us $60 a month.
Mm.
Zero. That was our first customer. That's how small we started. And then, I kind of had three basic principles of how I wanted to grow Magneti. Number one is meet lots of people and be kind to those people. Be as helpful to them as possible. Some will hire us. If they hire us, do as good a work as we can. That was like our strategic plan, was just be helpful and do good work. And, we ended up growing kind of the IRR on that business was sort of like a 67% IRR over 13 years effectively. And we just grew every year, even during COVID. And so again, it's a bootstrap business, very different than the dynamics required in the venture space. But we started small. We just slowly raised our rates up and up and up and up to the point where, we were turning down work because the budget wasn't big enough. And build, like I mentioned, build a great culture, try and build a place that people want to be a part of. Work's going to be stressful. Work's going to be hard. There's going to be those dynamics. But can our team believe that we have their back, that they have a voice, that we respect them? We might not be able to pay them more. The math might not work that way. But they can feel like we have their back. And to me, that's the easy part. But I still think a lot of leaders skip that part.
I wonder, so like, how did you met your co-founder at the beginning and then for the fund, obviously, but I guess like what were the original, like, I wouldn't say setup, but like how do you guys like kind of like uh spread, like, I guess like how do you guys like split the work between, fundraising or like building the team to like growing the company slash fund? Um yeah, maybe if you could share a little bit more.
Yeah, awesome question. So my business partner at Magneti was a wonderful man named Adam Williams. Shout out to Adam. I have no idea if he's watching, but he is a wonderful person. Met him through Young Life. I was involved with Young Life. It's a Christian ministry. I did it through college, and I met Adam there. David Wagner, my business partner at Wildwood, fantastic human. Shout out to David. He's on vacation right now with his family. He's not watching. David, you better not be watching because you're supposed to be hanging out with your family. Fantastic human. Grateful that I got to be in business with both of these men. Business partnerships are really hard. This is going to sound a little strange, but literally, I don't think business partnerships are a whole lot different than marriage. They are not much different than marriage. The emotional experience, the level of communication, the openness and vulnerability that you need to have in how you interact with this person is a level that you've never experienced before, except for in marriage. So that is a huge piece. Is how good are you? How good are you at interpersonal conflict, sharing things that are going on, how to bring up things that are not a big deal yet, but are starting to fester. That is a whole skill set in and of itself to say we are two very different people. We have very different strengths and goals in life, but we are in this together. We are on the same team, and we need to find win-win ways to move forward. So I think what I have found is the best teams, best co-founders just keep obsessing over communication.
Mm.
Just keep obsessing over how can we make sure that we're on the same page, to name things before they get really painful, to name elephants in the room. Like those little subtle skills are actually the entirety in many ways of what it means to have a great business partnership. So to your question about duties, like how do we split roles and tasks? So like for David and I, we have very different strengths and skill sets. So are you familiar with the Strength Finders, Grace? Have you ever done Strength Finders? It's one of those personality assessments.
Is that no, I don't think I'm thinking about the same thing.
Yeah, there's like, you have Myers-Briggs, you have Enneagram, there's a bunch of these, but
Yeah, I'm pretty sure at some point I did all of these, but I'm not exactly sure what I know.
There's one called Strength Finders where there's a list of 34 strengths, and you do this assessment, and then they tell you what your top 10 are, your top 10 strengths of that list.
Mm-hmm.
Well, as an example, David and I only share one of the same top 10.
Mm-hmm.
We have very different strengths, very different sets of experience. That was really important to me. Was I very much take a strengths view of the world, which is the same person in an environment where you're using their strengths can look like a superstar. If you take a picture, Shohei Ohtani, well, okay, he's a bad example because he's good at pitching and batting, but you take any other pitcher in the world and you say like, okay, they're going to be like the number 4 batter, in the lineup. That's not their strength. That's not their skill set. They're going to fail at that. And so I believe that in business, using our strengths is just this awesome strategy for getting the most out of the people on your team. And it also is what keeps people energized. So for David and I, we have just some very clear and open communication about what it means, what our strengths are, and who's going to do what. And we're just very blunt and open about that. And we did that from the very beginning, and that's been really fruitful. But one of the things that we have to commit to as business partners, and this is advice to any founders, you have to get good at having uncomfortable and respectful conversations. And that's its own skill set.
How would you like build trust with him? Like when, let's say you met him, I don't know when you met your co-founder, but I guess like, how do you quickly build trust in this location? And because I feel like starting a fund is like literally like a 10 years sort of game, and then we'll keep it as like the last question as it's we're hitting the time. But
yeah, and I'm actually really quick, I'm going to tell my next meeting I'll be a few minutes late, Grace.
Oh, okay, thank you. Sorry, we'll wrap.
No big deal. Sorry, hold on. My computer's being slow. Okay. Getting to know and building trust. Mm-hmm. I think the best process for getting to know someone in this form is like heart, head, heart. Meaning you start with like core values and trying to understand like what makes someone tick, what motivates them. That is super important as like a foundational thing. David and I realized early on we shared a lot of the same values. Our strengths are different. We have a lot of shared values around faith, around culture, around leadership, around how to lead a team, around how to build companies. Could tell right away. That's the first heart, is like just getting to know someone at a personal level. Head is about technical skills. Mm-hmm. Is like understanding is what they're good at, how they add value, things they love, things they don't love from a tactical perspective. But then once you get to that point, I've noticed you go back to the heart. And there's just like this, okay, all of this stuff is going well. We're communicating well. I see the strengths. But what is it really going to be like to be in the trenches with this person for tens of hours a week, right? And I don't have a magic formula to how to solve for that, but I think it's worth slowing down and understanding that well. I think a lot of co-founders just rush into that because they're, especially non-technical co-founders, are so desperate to find a technical co-founder who seems halfway decent that they overlook a bunch of yellow flags, potential red flags in their personality. Not because those people are fundamentally broken, but I just think that maybe the puzzle pieces don't fit. And I think that's often rushed.
I want to be mindful of the time, so we'll do like a quick 30-second fire round. What's your favorite book?
Favorite book, Ruthless Elimination of Hurry by John Mark Comer.
Who made the biggest impact in your career?
Shout out to Adam Williams, my old business partner at Magneti.
Who would you invite to your dinner party?
Oh, man. Man. If I have 5 seats, it's my wife and 4 kids.
Where can we find you outside of work?
Ooh, probably in the mountains exploring. We love going up to Winter Park this weekend to camp and ride bikes.
Oh, wow. Love that. Well, Jesse, thank you so much for coming on the show today. It was such a fun conversation.
Grace, thank you for having me. I really appreciate your time.
Thank you. Let me quickly answer.